Good evening, all of you. We are very happy to meet you all this evening to report our quarter 2 numbers. We have really had an outstanding quarter. A quarter where our performance across the board has been extremely satisfying. If you really look at the growth point of view, we have delivered a 3.2% in terms of rupee terms and 3.9% in terms of dollar terms. And we've had a volume growth of 5%. Our international revenue has grown by 5.3%. And we have signed a good number of deals. 10 deals we have signed across sectors and across markets, of which 2 are more than $100 million. Our operating margin has seen an excellent expansion by 119 basis points. And it has grown by about 8.1%. And it has been driven by offshore movement of another 74 basis points and utilization improvement by 230 basis points. Net profits has grown on a sequential basis 7.1% to close at 1,642 crores. And the net profit margin has improved on a sequential basis by 81 basis points. And we had a net addition of employees this quarter, 300 employees, and we are going to be recruiting, or rather bringing in 8,000 trainees during Q3. We have also done the promotions during the quarter, and because of the spectacular performance across the board and higher profits, we are also paying out variable pay to the tune of 150% this quarter. Then, in terms of giving more color, the growth has come across markets. The US has grown, and we've had excellent growth come from the emerging markets. From the industry point of view, banking and financial services has done exceedingly well. And then we have also seen growth in utility sector and pharma sector. And our financial services products unit, which has been having rather difficult times over the last few quarters because of the market conditions, registered excellent growth this quarter and also registered 11 new wins during the quarter. And we've had a very healthy deal closures and healthy pipeline. Overall, it's been a stellar performance at the revenue line, gross margin line, operating profits line, as well as the net profit line, and there is no one-off. And it has been made possible by strong operational execution and tremendous cost management focus on continuous improvement. And now, actually, we would like to go and take questions. But before that, from all of us here, I'd like to wish you all a happy Diwali and a festive season. Take questions now.
Hi Chandra, congratulations. Just wondering though, last time you all described your performance as stellar. This time it was very outstanding, so I'm just trying to understand what's the difference.
This time it's a notch better than last time.
Oh, it's a notch better, right. In terms of last time you said there were challenges in the high-tech, manufacturing and telecom vertical. Has that bottomed out is what I would want to know. Also, is there any good news with employee salary hikes? Is that a possibility? Because a lot of other companies are mulling upon it.
As I said, the performance this quarter, we would put it a notch better than last quarter. So it's been a very satisfying performance across all the line items. In terms of the industries, the telecom, manufacturing and high-tech continue to be industries we watch. The recovery is still to show up. But having said that, we think we have bottomed out in those industries. From here, we should start to see improvement going forward. In terms of payouts to employees, this quarter we are paying 150% of the variable pay. That's 50% more in view of the performance achieved.
Maha, could you just break it up into the top line as to how much is the cross-currency benefits? You normally give the breakup of the top line and the EBITDA margins. Could you do that this time?
Okay, as far as the revenue growth is concerned, volume has contributed 4.97%. Exchange rate impact, we have had a 93 basis point positive impact. Pricing, we have had a negative 1.39%. And offshore leverage, because of which the revenue has been depressed, that's a negative 1.35%. And therefore, overall, you've got a 3.16% from a revenue perspective. To take the margin, the exchange rate impact, I talked about this 93 basis points. That has contributed to a positive 20 basis point. Offshore leverage has contributed to a positive 16 basis points. And Chandra talked about this variable, the quarterly variable, 150% of the quarterly variable that's paid. And the promotion impact, that has had a negative 94 basis points. And then SG&A efficiencies, we have had a total of 1.21% positive. And there are other productivity improvements and so on, that's on 81 basis points. And therefore, overall, we have had a positive 1.44% improvement in margin.
Yeah, all are sequential.
Again, on the salary issue, does this mean if there was a freeze on the wage hikes earlier, has that been lifted, or have you just for this time only increased the variable component? Second, I want to understand why this has been done. Is it to align with the festive season or something, this increase, and on the other side, and has there been any pressures from other companies, most notably the multinationals who have gone ahead and given their wage increments? So that has because once they did that, then we saw some of the Indian companies do that immediately after. So it obviously it's suspicious. So
okay, let me take that. And see, as far as the compensation is concerned, it's a performance-driven culture that we have. And compensation, as you know, for us is fixed component plus the variable component. And the performance, as we mentioned, this particular quarter has been stellar performance. So as a result, the variable has to reflect that. And that is what we have reflected in the variable payout to our employees, where we are saying it's 50% more as far as the quarterly component is concerned, that will be paid out. So that is from that angle. It has nothing to do with the Diwali or the pressure from multinationals or anyone else. The only thing that it has to do with is the performance of the organization. And as we have said, the quarterly performance has been pretty good. So
I think, first of all, we are happy that it is happening at the time of Diwali. Okay, everybody is already happy. But the nature is one of performance culture. Okay, you know that 4 or 5 quarters back, we also had a cut in the variable pay. This time we have done very well. We have exceeded the profit targets. In fact, in a very significant way. So we are rewarding employees for the performance.
Hi. Congratulations on a number that seems to have impressed the street quite a lot. If I may take you back to something that you had said in our last press conference, was that you're looking at chasing after larger deals, more number of them. What does this mean? What is the pipeline looking like? And what is this? Does this in any way correlate with the pricing decline that you've seen in this quarter? What are we seeing as a pricing trend?
The large deal closure this quarter has been very good. As I said, we have closed 10 deals. And it has come across verticals. We have closed deals in retail, in utilities, in government, in manufacturing, in insurance and pharma. And the deals have come in the US, India, as well as Europe, including UK. So across the board, we have seen deal closures, which is satisfying. And at least 2 of them are higher than $100 million. So I think the closure is happening and the pipeline is quite strong. We pursue more than 20-25 deals. Which we consider as large. So I don't think that it has any effect on the pricing effect that you see in this quarter. The pricing effect that you see in this quarter is primarily because of the mix change. If you really look at it, we have had a good portion of revenue come from the emerging markets in this quarter, and also the services side, BPO has seen a significant increase as a share of revenue. So these tend to affect the pricing a little bit, but not the margins. Okay, overall, the business mix during the quarter has changed towards a better margin for the quarter. But the pricing wise, I think we've had some impact.
You have mentioned that the budgets of the clients are tightly managed still now. So the clients are still very cautious on their spending?
Yes, especially the manufacturing, telecom and high-tech sectors still have to be watched. The recovery is still not happening. Overall, from a discretionary spend point of view, customers are still being very tight. So while we think the recovery is beginning to happen for us definitely, and we are seeing growth, the growth is going to be slower.
You have mentioned that BFSI sector you're seeing growth towards, because a lot of spending from BFSI sector, so that is pulling up?
Yeah, BFSI sector has done very well. As a percentage of overall revenue, we have moved from 43.9 to 45% of the overall share of revenue. That's an improvement of 110 basis points on a sequential quarter basis. So BFSI is doing extremely well.
Hi Chandra, just want to get a sense about, you've spoken that how BFSI has grown. Can you give a breakup or some sort of a explanation on the non-BFSI sectors, how they have done? Also, what sort of a change you have seen in the demand environment in the last 3 months, and how do you kind of see it probably getting better or cautious or what in the next few months?
See, BFSI sector is doing well. As I said, we are seeing both opportunities in running the business as well as changing the business. In the running the business, we are seeing more offshoring and managed services model, whereas in terms of the changing the business, we are seeing opportunities in mergers and integration, as well as in more controls and risk management, etc. And that is happening both in the US and in the Europe. We have also seen good deal closures in the financial services product segment. So we think the BFSI segment growth is likely to continue. As for other sectors, as I said, we have done very well in pharma. We have moved the share of revenue from the pharma sector from 5.7% to 6%. That's a 30 basis point improvement. And as well as the utility sector, it has moved up from 2.7% of the overall revenue to 2.8%. That's a 10 basis point improvement. Then the sectors which have had a decline are telecom, high-tech, and manufacturing, all marginally 10, 15, 20 basis points. But nevertheless, we think these sectors will take time to show growth. However, I think we have bottomed out and we are likely to be more, likely to see more stability from here. But we would like to watch these sectors very, very carefully.
Two questions to Maha, please. Could you throw light on the depreciation? It's increased to 165 crores versus 139. And depreciation. And the second is in other income, is it a net loss from 168 crores to 86 crores? If you could comment on that. And for Chandra, there is one question. I'll finish that question to Chandra. The revenues from telecom have fallen compared to the same period last year. Given that there was some $2.5 billion, $3 billion of IT contracts handed out in India itself, do you think TCS could have done better? And if not already, what do you think will you do to sort of increase the pie that TCS can get? Because Wipro and IBM have been winning a lot of contracts, and TCS should have ideally done that. But why hasn't it happened, and what will you do to change that situation?
It's been a long set of questions from you.
So he wants to make the most.
As the first one was on depreciation, right? And obviously, we had been talking about the capital expenditure spend, and in this year, it is a substantial one, and we are bringing in new facilities and so on. We are actually expanding in the SEZ area, and given all that, the depreciation has gone up. Okay, the quantification is, in fact, in Chennai, we have brought in a further expansion and so on. And I think that's been the single most. There are other lease spaces that we have taken elsewhere where the depreciation has taken up. Hyderabad Hyderabad continues to grow and so on. So these are the kinds of places. And it is in line with what we had planned. There is nothing at all. As far as the exchange is concerned, see, we had exchange losses of two components. Yeah, you want the breakup as far as the other income is concerned? I think I'll give that. See, basically we have had 113 crore loss as far as exchange is concerned, as against about 84 crores that we had as far as last quarter was concerned. And as far as the interest is concerned, that has been more or less the same. It has not been very different from as far as last quarter.
Yeah, I'd like to add something to what Maha said, and then I'll answer the telecom question. See, overall, if you see the profit improvement, where is the other income coming from? If that's what you're searching, actually speaking, the business performance has been very good, and the revenue mix has changed, so the profitability has increased, and the costs have been managed excellently. So the profitability has fallen through. So you will see good profits in the gross profit line, in the operating profit line, and then it is flowing through to the net profit. That's why, in spite of the higher loss due to
actually, if you look at
currency,
the operating margin improvement, operating profit growth is higher than the growth at the net profit level. So which really means that it's really the business which has contributed towards higher profit. There are no one-off items.
One-off items. That's the main point. With regard to the telecom, I think our fundamental issue has been our largest telecom customer. That business for us is going through strain. And I explained it last quarter, the quarter before that, and that is still continued this quarter. And I think we have more or less bottomed out, we feel. And that has been the primary reason for our decline in telecom revenues. With respect to the deals in India, I don't want to comment about who is winning, who is not winning. We compete, and there are times we feel that it doesn't suit our business model and our business mix. So we don't go after those deals. And couple of deals we had to stop at some point in time because we felt that that's not suitable, didn't meet our criteria, so we didn't proceed with those deals. So we'll continue to be focused. We are very focused on Indian market. At the same time, for our business model, the deal has to meet our criteria. And what is good for somebody may not be good for us, and what is good for us may not be good for somebody else. That's all right.
Enough. Samir, ET now. Hi. Two questions. First question, you've done very well in major markets. You did speak about the UK market. There was a client-specific issue over there. So how do you see going ahead, specifically with the UK market? And the second question is, your revenues and profits have risen, especially due to retail and distribution. Can you just throw some light on that?
See, I think in terms of the UK market, 4 out of the 10 deals I talked about has come from UK market. And the UK market also has helped us gain some good wins in the utilities and the government sector. And UK market is growing for us. It's very promising for us. The deal pipeline is healthy. Deal closures are good. And as I said, the strain that we had with one large telecom client is also more or less bottomed out. So that should help us to grow in the UK market completely. And retail, I've been mentioning for the last few quarters, retail, pharma, utilities, these are sectors which are doing exceedingly well. So we've had excellent win in retail this quarter also, and we have made some announcements as part of the large deal wins in the press release or in the pack. So please go through that, and retail is looking very good for us.
Listen.
Just a quick question on going forward, what is the impact you expect from the SG&A expenses, given that the growth is picking up and the IT expenditure is also picking up? And two, what's the latest hedge position, and what do you expect in terms of rupee movement to have impact on the next quarter?
See, as far as the SG&A expenses are concerned, there are two comments that I want to make. One is, you can see that our utilization rate has gone up. We put the bench as far as in SG&A. And therefore, there is an element of benefit that really comes in. That's where, in a sense, we put our rate productivity improvement. There is a 230 basis point shift when you take the utilization, including trainees. That's a very critical one. The second one is, even if I were to remove some of these employee cost, depreciation, bad debts and so on, there is over 65 basis point improvement that we have. There is 65 basis point improvement that we have made as far as SG&A. What I'm saying is this, that we have already made a lot of investments in terms of marketing footprint, selling footprint across the world is concerned. And what we are essentially doing at this moment in time is to leverage that more effectively. We will incur more SG&A expenses, but that will be in tune with the growth in the marketplace and so on, and therefore we will move towards a 19%, which is what we had set as a goal as far as SG&A is concerned. As far as the overall hedge position is concerned, I don't want to give you any figure at this point in time. As we said, we hedge all our receivables. Whatever receivables we have, they are fully hedged. As far as the revenue is concerned, we have not been essentially entering the market with regard to newer hedges and so on, but we will actively watch the situation and move ahead.
Rachna.
Hi, congratulations on numbers. Wanted to check with you. You said that the budgets are improving now, and so can you tell us, is it more of discretionary spending that is happening now? Has it started up? And second, there were reports on your passport contract. So can you give us some clarity on that?
On the first question, I think the budgeting cycle for the customers is currently going on. Customers will finalize the budget towards November and December. So at this point in time, we don't have full visibility for the budgets for next year. We are in discussions with many clients, and the discretionary budget, as I see it, will still be under stress. Okay, and even if there is a budget, I think it will be under very tight control and management. Okay, so that's why I think we should not expect that sudden bounce back in the growth rates, etc. We should not expect. I think the discretionary budgets will be very, very carefully monitored. But having said that, the conditions are certainly improving from our point of view.
Amrut, ETIG.
I just wanted to ask you.
I think with respect to any specific project, it is better not to go on an elaborate comment. But having said that, this project is going very well. It's going to go live, and we always like to talk about it along with the customer. So I think it's this year, and I think, but it's the decision of the government. Really, it's not our decision. Okay, the government's decision to go live. I think it's going well, and it's something that the government will communicate. But it's always we like to communicate those things with the customer. It's very not appropriate for me to just give you dates.
Just trying to understand with the rupee rising, what will be your hedging strategy? I mean, I'm just trying to understand the rising rupee, what will be your strategy? That is one question. I just wanted to finish. A couple more. See, you didn't mention the aggregate hedging figure, but I'm just trying to understand at what currency rate are you entering at broadly? And also, if you could just give us the margins of CGSL, which you acquired last year, how do they compare with the aggregate entity? I mean, I'm just trying to understand how do the BPO entity's margins compare with the overall?
See, as far as, as I said, we are not giving any absolute number right now because, it has to go in tune with the policy. As I said, we hedge all the receivables, which we have done. As far as revenue is concerned, we have an old position, roughly about 80 million will come in as far as this quarter is, 75 million as far as this quarter is concerned, which is all right. That was booked at 41. Our approach is that we continuously keep watching, and one figure that I would like to give you is that last year the average rate was 46.30. Okay, and we'll see whether we can defend that kind of number. But the issue that we need to worry about at this moment in time is not one single rate for a dollar, but the cross currency movement. The pound, last quarter we started with 1.66 to a dollar to a pound. Came down to 1.60. Okay, and that's the kind of movement that had really, I'm talking about the beginning rate and the end rate and so on. So we'll have to keep watching those kinds of movements and take a position as far as each currency is concerned. So at one single rate, defending and so on doesn't really work out when we have a multiple currency. So the answer that I want to give you is that we have a target in mind we have prepared a budget with certain approaches and so on, and so far we have gone in tune with that and we will defend that. The margins of CGSL, we don't talk about any specific this one, but all that I can tell you is that CGSL, which incidentally is now called TCS eServe, is doing very, very well.
Erica.
Yeah.
Can you just repeat the volume growth component of revenue growth? I couldn't hear what you said. And then I wanted to ask you what's going on with your hiring in the U.S. And finally, if you could give us a little more detail about your offshoring rule. So what's the mix? What has that balance shifted? And how many temporary employees have you pulled back to India because of China?
I'll just take that volume growth. What I said was that 4.97% is the volume growth that we have had in this quarter. And then I went on to give certain numbers with regard to the impact of pricing, with regard to impact of exchange and so on, and then ultimately said 3.16% is the overall growth. But the most critical thing that we have to examine is that 4.97%, that is the increase in volume that we have had as far as this quarter is concerned.
Offshoring is also moved by 70 basis points, and that has contributed to a decline of 135 basis points in terms of growth rate. And in terms of recruits,
I think her question was really what do you think? Offshoring is a good thing as far as we are concerned.
How many people have been moved back? About how the mix of the onshore-offshore mix has shifted, and how many people you've actually taken back.
I don't give the exact head count, but basically in terms of revenue, 70 basis points have moved towards offshore, which means that more people have shifted offshore in terms of head count than on-site in general. But in terms of the recruitment in the US, Ajay?
As far as the recruitment in US is concerned, what we said, we will be hiring about 250 freshers from various colleges this particular year. And we have already, 140 of them have already joined. And we are on target as far as this particular plan is concerned. So this is the fresher hiring. And as far as the laterals are concerned, those we are doing based on our business needs and based on our business requirements for niche kind of skills. That is going on.
Shifya.
My question was regarding 1,000 hires which you said you will be doing. Are these for offers which you've already made, which you're going to board? And what is your strategy for almost in November? So what will be your strategy, campus strategy this time? This question is for Ajay. The other question for Chandra, which is a larger a macro question, if you will. I mean, you have a joint venture with the Chinese government. So do you see, because of the deteriorating relationships between India and China of late, do you see any kind of stress for the JV and also for your expansion and business in China?
Okay, so let me take the first question of yours, which is the 8,000 trainees that we are saying who will be inducted in next quarter, which is Q3, are from the set of offers that we had released last year for them to join in this particular financial year. So it's from that segment itself. And as far as our campus recruitment is concerned, I said November, and we will plan it out, and we will be going to the campuses somewhere around fourth quarter, which is the last semester as far as the students are concerned. And we will plan out our numbers and the total numbers that we would be hiring somewhere around November end time frame, so November to December. So within that next quarter, we would be in a position to get all those details sorted out and tell you.
In terms of China, first of all, I think there is no impact as far as we are concerned. And we have good presence in the market, and we are executing well. There are a couple of major projects that we have been doing in China. The China Money project, which is a project as part of what we call as the CFEDs, under the People's Bank of China, which is their federal bank. I think that project has gone live this quarter. It's going extremely well. So I think overall the strategy is working, and we see tremendous opportunities, but it's just that the culture, the language issues, and our own learning in that market to do business is taking time for us to scale. Otherwise, I think it's pretty much on track. Wow.
No, she's covering all.
Maha, sometime back, you had said that, you had stopped taking new hedges and you were just hedging for the immediate quarters. You were not taking any new hedges. So obviously in this kind of, currency movement, a long-term hedging strategy will be more beneficial, and you have followed that in the past. So are you going back to that strategy, or what exactly are your thoughts on this?
We'll wait and watch. Nothing more than that. The basic thing is, when you are essentially, as I said, the basic principle is there are certain rates that you want to protect and defend, which we are, I think, that's where I mentioned that it is not a simple proposition right now. It is not just the US dollar, but cross currency. Their relative weightages are becoming very different. Their relative impact is also becoming different. So all those things are taken into account. I think we are executing very well from our basic principle of defending certain rates and so on. And we will take it as we go along.
Right. Chandra, last quarter you said that you'd seen a certain stability in the US market. Do you still maintain that? And of the new deals signed right now, can you give us a breakup of the deals coming in from US at present? And also give us a outlook on the business, on the deal pipeline right now.
Definitely I maintain that. I think US market showing stability, especially in the financial services sector, retail sector. And as I mentioned to you, we probably feel that we are bottoming out in the other three sectors, though we are not sure that whether the growth will come in the immediate quarter. In terms of the deals closed, 3 came from the US, 5 from Europe and UK, including UK, and 2 from India.
So while UK was a challenge last quarter, you've seen a stability in UK in this particular quarter.
The UK is a very, very client-specific issue. As I said, we had a major exposure to one of our largest clients, and that continued to really pull us down. And as we are closing more deals, and that also that particular impact is bottoming out, so we should do better.
And what is the outlook for how many deals? Last time you said there were 20 large deals that you were looking at.
We have got more than 20 large deals under the pipeline.
Okay, just you guys have been one of the beneficiaries of vendor consolidation. BP deal is a case in point, but a lot of analysts and everyone's questioning the contracts, the nature of the contracts have sort of changed, where you're talking about pay only when you have delivered kind of a thing. That in future will sort of put pressure on margins and realizations. How true is that concern, if you could just sort of
I think if you really look at the deals that we have closed this quarter, I think it's very standard type of deals. There are no onerous clauses or anything like that. So it's a normal contract that we're used to executing, and we've not taken any hit in
But are clients talking about those kind of
See, there will always be situations, one-off situations, where there may be a requirement to do the deal structuring different. But by and large, they are large-scale outsourcing contract, managed services contracts, BPO contract, or infrastructure consolidation contracts, or ADM contracts. Really look at this quarter, ADM has done extremely well. Growth in ADM and assurance services have been very satisfactory for Q2.
Hi. Ajoy, this one is for you. You spoke about hiring. Could you give us some sense of the lateral hiring, or is it still, as you had said last time also, freeze? And Chandra, one for you. You're saying among the emerging markets, Latin America and APAC continue to show growth. Do we see the annuity kind of play that you always wanted in these emerging markets coming to play now?
Yeah, as far as the hiring is concerned, 8,000 trainees, they will be joining in next quarter. And as far as the laterals are concerned, see, the lateral hires will be based on the business-specific requirements for niche kind of skill sets. So that will continue, and we will continue with that particular process. As far as laterals are concerned, how many I'm going to do? No. As far as last quarter is concerned, we do have the breakups. We have done enough lateral hiring in the last quarter as well. So it's not that when I say frozen means zero, no. So we are doing it based on our business needs. But the training numbers I can give you, which is 8,000.
So I think that's a great point that you're making. Still the revenue mix from the emerging markets of Latin America, Asia Pacific and India is something that we got to watch out for. We still have to get it right. Even this quarter, if you really see, our international revenues have grown by 5.3%, whereas the India revenue has dropped by 18% on a sequential basis, which has pulled down the overall revenues. So that kind of volatility is going to be there for some time. We've got to carefully manage it. So the right level of annuity versus discretionary mix is still not there, and it will take time. But it's our desire to get that right so that we don't have this kind of volatility.
That the existing clients are scaling up, or what makes you say?
Both. I think we are also winning new deals. A good opportunity is coming. See, as I mentioned in the last media interface, we have built a critical mass in the emerging markets. Between these three regions, we are already about 1.2 billion as of last quarter. And then we have a critical set of clients, we have a delivery model, we got the people, close to 10,000 people in this market, belonging to those delivery centers. And in India, again, we have a dedicated delivery team focused on the India market. So if you look at all of this, I think we are extremely well positioned to not only bid, but also win and execute these engagements. But we have got to watch out for the mix. That's something that we watch out for.
If you could tell us,
what is that?
Offshore percentage.
51.1. 51.1.
See, you got it?
We are always on a continuous improvement journey.
I'm not sure what you are intended to. That's we've done better than what was expected, I guess.